You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Friday, 28th day of February, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. We do 2 every trading day. Now the first one, that's our live training room. So it's reserved for members only and those who are taking their 1-week free trial. If you've not taken your 1-week free trial, when Michael joins us in a bit, he'll show you step by step how to do it. It's a piece of cake. Get your indicators indicating, etc. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break. We come back for this broadcast, the afternoon broadcast, which, unlike the morning broadcast, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There are 2 different ways to join this afternoon broadcast live. The best way, you only have to do this once. Go to mytradingiq.com, scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before this broadcast starts. In the email there's a link. So at 12 noon Eastern, all you have to do is click the link in the email and it'll automatically log you into our platform. The benefit there, you'll have access to the question box so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is very easy to remember. youtube.com/CFRN. You already know the YouTube part, so all you got to remember is /CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to see how we've evolved over the years. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Now, you're not going to watch them all, obviously, but just poke around. Again, you'll see from where we started to where we are now. Pick a day, pick a year, watch a little bit, scoot to another day, another year. You get the idea. youtube.com/CFRN. This is our schedule for each afternoon broadcast. So we'll dive right into our daily devotional. And our current topic is how to deal with complicated people. Maybe you know some, maybe you are one. Either way, we're in day 3 of 7. Today's scriptures, Colossians 3, verses 12 through 14, and I'm going to share that from the Message translation. So, chosen by God for this new life of love, dress in the wardrobe God picked out for you. Compassion, kindness, humility, quiet strength, discipline. Be even-tempered, content with second place, quick to forgive an offense. Forgive as quickly and completely as the Master forgave you. And regardless of what else you put on, wear love. It's your basic, all-purpose garment. Never be without it. Again, Colossians 3, verses 12 through 14. So, what God does with complicated people. How do you want people to respond if you offend them in some way? Say you lose your temper during a conversation with a loved one, break a promise to a friend, or say something snarky to a coworker. What would their ideal response be? I can tell you what I'd want. First, communication about whatever the issue is. Don't just get mad at me. Talk to me. Second, I'd want understanding. There was surely a reason behind what I did, at least in my own mind. Give me the benefit of the doubt rather than jumping to negative conclusions. Finally, and most importantly, I'd want grace. I'm only human after all, and I'm not perfect. Here's the thing. I want that from other people when I fail. But do I give it to them when they fail? Or do I quickly jump to judgment and then to rejection? Jesus famously said, "Do to others as you would have them do to you." Luke 6:31. That includes choosing to offer the same mercy and grace to people around us that we would like for ourselves. Remember, God did this for us first. He loved us and chose us while we were still sinners, and He keeps loving and choosing us every day. Despite our ongoing tendency to goof things up, that is an invitation and an example to treat others the same way. I love Colossians 3:12. Therefore, as God's chosen people, holy and dearly loved, clothe yourselves with compassion, kindness, humility, gentleness, and patience. In other words, because we know we've been chosen and loved by God, we can deal with complicated people differently. Compassion is about humanizing others. It means viewing them as people, not as problems, and choosing empathy over judgment. Kindness is love in action. It means treating complicated people with generosity rather than giving them what they deserve. Humility is a self-awareness issue. When we recognize our own complications, we can make space for theirs. Gentleness means handling issues that arise with care and wisdom, not with harshness or rudeness. Patience is about having a long-term perspective. Patience makes room for genuine healing and growth rather than trying to control things for our immediate convenience. Think about the complicated people you live with, work with, or go to school with. How could you clothe yourself with these 5 mindsets today? And while you're at it, how could you treat yourself this way too? After all, that's what God does. Let's pray. Heavenly Father, thank you for clothing us in your love and your grace. Help us to walk in compassion, kindness, humility, gentleness, and patience. Teach us to forgive as you have forgiven, and to bind everything together in the perfect unity of love. May our words and actions reflect Christ, bringing peace and harmony to those around us. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Friday. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow's up 204 points. The Nasdaq's up 94. S&P 500 up 26. The Russell 2000 up 13. No movers, no shakers. But I think for the first day this week, they're actually all 4 green. In the commodity basket, crude oil down 66 cents, trading 69.70 last. That's a drop of just shy of 1%. Gold down $36.10, trading 28.59.80 last. That's a drop of 1.25%. Silver down 52 cents, trading 31.59 last. That's a drop of over 1.5%. In the Asian markets at the close, the Nikkei fell 1,100 points. That's a drop of almost 3%. The Shanghai fell 67, almost 2%. The Hang Seng fell 776 points, 3.25%. And in the European markets at the close, the FTSE posted a gain of 53 points. The DAX basically unchanged on the session, up less than 1 point. And the CAC up 9 points. So, it gave us a red day in Asia. It was a green day for the UK. And it's a green Radio Friday here in the US of A. Let's look at the news. Thousands of workers at the Washington, D.C. headquarters for the U.S. Agency for International Development, USAID as it's called, cleared out their offices yesterday as the shutdown of the agency by the Trump administration continued to advance. The terminations follow the cancellation of roughly 90% of U.S. aid-funded work around the globe. I mean, as they read the list last night, we're sending $40 million a week to the Taliban. How's that even possible? But I digress. Created 6 decades ago as a means to consolidate the U.S. government's foreign aid efforts, USAID is appropriated roughly $40 billion from Congress each year. The future of the organization and its operations remain unclear. While it is authorized and funded by Congress and requires an act of Congress to dissolve, some analysts say its programs could be legally folded into the State Department. Of the roughly 6,000 USAID employees affected, some have been placed on a leave, while others have been permanently fired. The numbers of each have been difficult to determine, though recent reports suggest around 2/3 will remain on leave while legal challenges proceed. In related news, a federal judge late yesterday ruled that large-scale firings of probationary workers may have been unlawful. The issue, of course, is expected to be appealed. Funding the Taliban. Wow. And scholars wonder why we couldn't win that war. Unbelievable. Anyway, jumping to the Congo. At least 60 people have died and more than 1,000 have been infected by an unknown illness in northwestern Democratic Republic of Congo, according to the World Health Organization. Symptoms of uncontrolled bleeding, vomiting, and diarrhea resemble the highly contagious Ebola and Marburg viruses. The lab tests have ruled those out. The outbreak began in January in the village of Boloko, where 3 small children died within 2 days of eating a dead bat. 4 others died within days. A second outbreak began 2 weeks later in Bomate, a village more than 100 miles away, killing 45 and infecting more than 400. No link has been discovered between the 2 villages. The World Health Organization is reportedly testing patients for a variety of potential causes, including food poisoning and typhoid. The country saw dozens killed by a similar unknown illness, later confirmed as severe malaria in December, and is dealing with a wave of Mpox cases, which have killed 1,200 people since early 2024. Rwanda-backed rebels known as the M23 have captured several cities in the country's east, leading to the deaths of thousands and displacing hundreds of thousands. If you've never prayed for Africa, pray for it now. Doesn't look good. Sure, you've heard by now, but Oscar-winning actor Gene Hackman, 95, and his wife, classical pianist Betsy Arakawa, were found dead, along with one of their dogs in their New Mexico home this past Wednesday. The cause of death remains unknown as of this writing. Authorities initially said there was no suspicion of foul play, but later reports suggested the pair had been deceased for multiple days, with a scattered prescription bottle found near his wife. The fire department found no carbon monoxide or gas leak, though official autopsy and toxicology results are pending. Hackman, born January 30th, 1930 in California, had a challenging childhood before enlisting in the Marine Corps at age 16. After his service, he briefly studied journalism before pursuing acting in New York. His career spanned over 5 decades, with more than 100 screen credits and 5 Oscar nominations, winning twice for his roles in The French Connection and Unforgiven. He also won 4 Golden Globes and the Cecil B. DeMille Award. Hackman was known for portraying complex characters in films such as Bonnie and Clyde, Superman, and Hoosiers, and he excelled at playing memorable villains, bad guys. He retired from acting in 2004 and settled in New Mexico, where he wrote historical fiction novels. Well, our hearts, thoughts, prayers are with the family of those left behind. And I bet those novels he wrote are probably flying off the shelves. Can't say I've ever read one, but I just might. Or at least listen to the audiobook. Ongoing tariff threats from Washington and potentially sweeping government job cuts have darkened consumers' mood and may be weighing on an otherwise mostly healthy economy. Data released Wednesday showed that consumers slashed their spending by the most since February of 2021, even as their incomes rose. On a positive note, inflation cooled, but President Donald Trump's threat to impose large import taxes on Canada, Mexico, and China, the United States' top trading partners, will likely push prices higher, economists say. Some companies are already planning to raise prices in response. Americans cut their spending by 0.2% in January from the previous month. That's news from the Commerce Department this morning, likely in part because of unseasonably cold weather. Yet the retreat may be hinting at more caution by consumers amid rising economic uncertainty. One of these days I'm going to have some good news for you. Got to be hopeful, right? The latest reading of the Federal Reserve's preferred inflation gauge showed prices rose on a monthly basis but dropped year over year, which should keep interest rates on hold when the central bank meets next month. The PCE index, personal consumption expenditures, which strips out food and energy costs because we don't use those, rose 0.3% from the prior month during January, but that rise was in line with expectations. Prices rose 0.2% in December. On an annual basis, core prices rose 2.6% year over year, which was also in line with expectations. That was down from the annual increase of 2.9% in December. The The data showed a more muted pace of price increases for the month of January than a separate measure from the Consumer Price Index, which showed the largest rise in core prices since April of 2023. So they're saying the Fed is stuck in neutral. Did you know today is Economic Blackout Day? A retail boycott is hitting major U.S. businesses today as an online campaign calls for Americans to spend nothing at places such as Walmart, Target, Amazon, and McDonald's. The motivation for the so-called economic blackout are varied. According to John Schwartz, who's the founder of the grassroots organization, the People's Union, Schwartz first called for the blackout in an Instagram video that gained more than 8 million views. He said he wants to end alleged price gouging and tax avoidance by major corporations. Schwartz said we can protest by not shopping at McDonald's, Walmart, and Target. If you have to go out and shop today, go to a local business, a small locally owned boutique. But if you can, don't go out and spend a dime. Schwartz said his message, advocating for price reductions, became conflated with a separate consumer pushback on companies that have backed away from DEI policies. That's diversity, equity, and inclusion. As you know, our country is turning to a meritocracy. That means people are hired and given jobs based on their ability, not their ethnicity, their origin, their sexual pleasures, or the color of their skin. Wait, Martin Luther King said something about that. Kind of close. Target, Walmart, Amazon, and McDonald's were among the many companies that announced recent about faces on diversity, a list that also includes Google, Meta, and Tractor Supply. Now all 7 of those companies appear on a list of DEI rollbacks maintained by the NAACP as part of a Black Consumer Advisory Initiative launched earlier this month, designated to encourage support for businesses that expand their commitments to diversity. If corporations want our dollars, they better be ready to do the right thing, according to the CEO of the NAACP. Target is also mentioned as a special focal point of another advocacy group, Black Wall Street Ticker, that has called for a corporate fast from spending any money at the Minneapolis retailing giant, roughly coordinating with the 40 days of Lent starting March 5th through April 17th. To see companies we've supported heavily like McDonald's, Ford, Amazon, Meta, and Walmart betray our long-standing relationship is beyond disheartening. But the greatest insult comes from Target. It's going to be interesting to see how many people don't go to Walmart, don't order from Amazon, or don't grab a Big Mac for lunch. Yeah, the only reason I can see for not grabbing a Big Mac for lunch is it's like $9 now, or close. Actually, if you get the meal with a small Coke and a small fry, I think it's over $10. I don't go there, hardly ever. Can't remember the last time. So it may be even more now. I don't know. From Reuters, Silicon Valley Bank's former parent may pursue a lawsuit to recover $1.93 billion of deposits that the Federal Deposit Insurance Corp, that's the FDIC, seized following the bank's March 2023 collapse. Now, this is a federal judge's ruling. These federal judges suddenly have this incredible power. Now, if I'm not mistaken, federal judges are appointed. They're not elected. But somehow they're given the power to override the people who actually were elected. Congress is going to have to fix this. In a decision yesterday, U.S. District Judge Beth Labson Freeman in San Jose, California, said the former parent, now known as SVB Financial Trust, adequately alleged that the FDIC, in its corporate capacity, maintained control over the deposits, although the allegations were vanishingly thin. The agency has argued that the deposits were controlled by the FDIC in its capacity as Silicon Valley Bank's receiver, a different legal entity than the former parent is also suing. Freeman also said the former parent can try to show it properly relied on FDIC insurances that deposits would remain safe, inducing it to leave them alone. She dismissed a due process claim. Lawyers for the FDIC and the former parent did not immediately respond to requests for comment on Friday. Speaking of lawyers, if you're looking for a weekend binge on Netflix, check out Lincoln Lawyer. Has nothing to do with Abraham Lincoln. Has to do with an attorney that prefers to travel and do business out of a Lincoln. But I don't want to spoil any more of it. I am now well into season 3, but you want to start at season 1, episode 1. It's nothing groundbreaking, earth-shattering. I don't think there'll be any Emmys or Golden Globes, but it is entertaining. And after all, isn't that why we used to go to the movies and now enjoy them in our own home? Again, it's called The Lincoln Lawyer. From Bloomberg, as President Donald Trump lashes out at government agencies across Washington, one of his favorite first-term targets, the Federal Reserve, has been getting a relatively easy ride. Things could, of course, change at any moment, and it's true that since returning to the White House, Trump has called for lower interest rates, criticized the Fed for failing to get a grip on inflation, and opined that it's not much good at regulation. But that's mild stuff from a president who once called U.S. central bankers boneheads. I'm going to go with that one. Notably, Trump described the January decision to hold rates steady, which looks set to be the Fed's stance for some time, as the right thing to do. He hasn't reprised a first-time wish to sack Jerome Powell. Even an executive order to bring independent agencies to heel carved out an exception for monetary policy. Our new Treasury Secretary, Scott Bessent, wants to focus on bringing down the long-term interest rates, not the overnight ones set by the Fed, and Trump appears to be going along. I guess we'll see, won't we? On the home front, Logic 247. That's our 24/7 around-the-clock E-mini alert service. Not just E-minis, also crude, gold, silver, over. We're currently in week 343. Over the last 343 weeks, we have issued over 19,000 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. This week, now Valerie did this recap this morning at 6:30 a.m. Eastern. There have been a few added since then, so she'll finalize the recap for the week this afternoon or tomorrow morning. But at the time she did the recap, we had issued a total of 45 alerts since the markets opened Sunday night at 6 p.m. Eastern. At the time of the recap, we were still waiting on the outcome of 3. That gave us 42 actionable alerts, of which 4, or 10%, would have been stopped out, based again on market structure and that simple process we teach all of our passport holders. Now, the purpose of the logic alerts, while yes, you can trade them as you're learning how to read the chart, but the real purpose of the logic alerts is to teach you how to read the chart. You need to be able to look at a chart of any market and with the help of our Hummel indicators, instinctively spot major resistance, major support, and the windows of opportunity in between. Now keep in mind, those are potential areas of resistance and potential areas of support, because nobody knows what's going to happen next in the market. But if you want to learn how to trade, first you need to learn how to read the chart. And if used properly, that's exactly what the logic alerts will help you do. Each logic alert has an entry price, an initial target, additional targets, and a final trade to target. The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Long before we had Logic 247, and that's a long time ago, we had the concierge trade alerts. Now they're different in a couple different ways. Number one, they don't come out around the clock. They're posted as a static report, either shortly before or shortly after the Globex open each evening. We all know today's the Friday session, but for futures traders, the Friday session began last night at 6 p.m. Eastern. So 5 minutes before the markets opened last night, futures close at 5 p.m. Eastern, and then they reopen 1 hour later at 6 p.m. Eastern. So 5 minutes before the open last night, all of our members and trial members had all of these targets: the S&P, the Dow, the Russell, crude oil, the NQ, gold, and silver. So let's go take a look at the charts. We'll start where we always do, with the S&P 500 E-mini futures daily chart. Now this is quite a string of red days we've had. I think Stefan posted in the discussion group, he had to go back to April, I think, of last year to find a string like that. So yesterday's close, or yesterday's low, was 58.73. Today's low, 58.57. We've been up, we've been down, and now we're hovering right around yesterday's low. And interestingly, if you follow that horizontal line across, support, support, we spiked it there. Where's the next logical place for price to go? With red and falling overhead and a bearish cross completed. That's when the red line gets below the green line. We've got this area right here. The low of this candle is 58.42 and a half. Then we've got the 38% fib retracement at 58.11/58.12. Now this is the all-time historic high put in December 6th of last year. We have hit the 38% fib retracement once since putting in that all-time historic high. And look at this string of green candles. Looked like we were headed to put in a new all-time high until we didn't. We pulled back to the BBC, and the pullback held and held and held and held and held and held and held until we got right here, basically a double top across this area right here. You could even call it a triple top, I suppose. And then it's been pretty brutal since then. I don't think we'll hit the 38 today, but keep it in mind Sunday night when the market's open. Now, the last time we hit the 38, now back over here, this wasn't the 38% fib retracement. This line did not become this important area didn't become the 38 until this all-time historic high was put in. So the one time we've touched it, we got quite a bounce. It took us from 58.11 all the way up to 61.62. 150 points. And then the retracement. Now the pullback to the BBC holds more often than it doesn't. This is really quite rare. It held and 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 held until eventually price traded through it. Now the pullback to the BBC, whether it's pulling up from below or down from above, the pullback holds more often than not, but eventually it will trade through. Keeps the markets fluid and tradable. Okay. So watch this low here and then be prepared for whatever happens here. Now, again, the last time we got this huge bounce. If we don't get the bounce this time, the 50% fib retracement lines right up with this bullish cross. That's when the blue line gets above the green line. Okay. Now, when you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. So, should we come down through the 38 and through this trend line, this should give us quite a magnificent bounce. In fact, on the daily chart of any market, a 50% fib retracement will almost always give a nice bounce. Daily charts are important because number one, it gives you the big picture view. And institutional traders, the ones with deep pockets who actually move price because of the size they trade in, they look at daily, weekly, and monthly charts. The way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. So I encourage you, whether you trade futures, stocks, crypto, Forex, ETFs, spend 2 minutes with the daily chart before you drop to your smaller time frames to actually start trading. Number one, you're getting a free look over the shoulder of the deep pockets who move price, and you're able to identify major areas of support and resistance that you can't see on the smaller time frame. Right now, the step line, which served on this bounce off the 24, the step line served as good resistance. Here we bounced, and again the 24 held. Okay, you won't see that on your smaller time frames. You also can't see that there's major support down here at the 38% fib retracement. And remember, the last time we touched the 38, look what we got. That's no guarantee that's what we'll get this time. But again, on a daily chart, anytime you hit a major fib retracement, whether it's the 24, the 38, especially the 50, almost always good for a very nice bounce. And I mentioned this last night in the members only workshop, the step line, the black step line. See how it's running parallel with red and falling? It's just barely starting to lean to the right. In fact, the step line is directly below red and falling, which is directly below the daily BBC. Once the step line crosses red and falling, we anticipate a retracement back to the BBC. Now, the markets are fractal in nature, and so is the BBC. You can put it on a daily chart, a weekly chart, a monthly chart, 30-minute chart, 5-minute chart, tick chart, range chart. The results you get will be relative to whatever time frame or range size chart you're looking at. So in other words, don't expect daily results from a 1-minute chart or vice versa. Okay? So you're getting the whole picture here. Just 2 minutes. Try it. All right. The 30-minute chart is where all alerts are created. Logic 247 and the CTAs. The vertical line separates today, Friday, from Thursday, Wednesday. When price drops to a zone, we expect support till proven otherwise. When price rallies up to a zone, we expect resistance till proven otherwise. The zones are published every Monday morning at 6:15 a.m. Eastern. We've published the zones over 15 years now, since December 14th of 2009. And once they come out Monday morning at 6:15 a.m. Eastern, they are carved in stone for the entire week. They don't change in any way whatsoever. So everyone had these targets 5 minutes ahead of the open last night. This was the opening candle. We're below the BBC, so we expect lower prices. We get below the step line, and we go right down to the short target to the tick. Support bounces up to resistance at the step line, which sends us back down to the short target again. But red and falling is now turned to blue and climbing. That's bullish. So we get a leg, a retracement. We get a leg. We do some consolidating here. Not taking out that high, not yet. And that gives us another move. At 9, this is the 9:30 opening candle on Wall Street. Took us right down to the short target for a third time. Support sends the market looking for resistance. And we found it right below where we would expect it. Right there. That's bearish. So we retrace the pullback holes for a bit till it doesn't. And now it looks like we may visit that short target again. On the Dow. Here's where we opened, below the BBC, along with red and falling. Down we go to the target, through the target, and to the zone. Remember, when price drops to a zone, we expect support till proven otherwise. Resistance when we rally up until proven otherwise. So we hit the zone, got the support, gave us a bounce up to the step line, resistance, which sent us back to the zone, and then red and falling turned to blue and climbing. And we got a leg, a retracement, a leg, a retracement. That took us all the way up to right here. Again, an unusual spot. Retracement to the BBC. And then the next leg took us right up to the long target based off this bearish cross. When the red line gets below the green line, that's a bearish cross. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. Not every time, but certainly more often than not. And we tested it once, twice, 3 times. And then institutional buyers just kind of threw the towel in. And now we're pretty close to being back to the short target. On the Russell, here's where we opened. Below the BBC, so we expect lower prices. And down we go right to the short target. Support sends us up to resistance, back to support, back to resistance, back to support. And then we get a run. Takes us right up to this area here. Okay. The step line had crossed, but we didn't get our retracement to the BBC. And so the step line ended up back on the left side of red and falling. And hopefully, if you look at the horizontal line on the cursor, you can see the importance of that. We've now traded through the BBC, and we're headed back to 2141/42. We're there, the weekly zone. Still got one more zone below, but that's where we're at right now. Okay, we'll pick up with the NQ when I come back. Michael's here. He's going to give us a recap of what happened in the live training room this morning, and then do some live trading on the TradingView platform. Then we'll finish the recap and wrap things up, wrap the week up with our good word for the day.
Excellent. All right, ready?
Yep, looks good.
Okay. Good afternoon, everyone. Happy Friday. Today is the final and 28th day of February 2025. So if you have not taken a free trial with us, just go here to mytradingIQ.com, click on the purple button right here. There is no credit card required for the trial. Just click on that purple button. Okay, when you do, it's going to bring you to this registration page. Just fill it out. Down at the bottom, make sure you give us your TradingView login ID. All right, if you're going to take the trial, you should really have TradingView charts. You can get a 30-day trial on TradingView charts. It costs $7 for real-time data. You're going to have to pay that. But if you have NinjaTrader and you want to look at Ninja charts, you can use Machine ID. But if you just want to trade on NinjaTrader, that is fine. You can do that as well. We don't have all the indicators on NinjaTrader, so you need to get TradingView charts. Now, if you don't have TradingView charts, you can go here to trading platforms. Scroll down to right here where it says TradingView platform. Watch this video, click on this link. This link is going to bring you to this page. They just had a sale the other day. It was 50% off the other day. It's not anymore, but it was 50% off the other day. It might have been a location sale because I was on Phil's desktop. I was doing a remote onto his desktop, and I believe he was out west. And it might have been, they do these sales based on geographic location, I think. And he had a 50% off sale wherever he was, and he paid for the annual. It was like $14 a month for the annual, for the plus. Anyway, go to non-professional, go to monthly, and sign up for the essential, at minimum the essential, at plus the maximum probably. You probably don't need more than 4 charts at a time. Okay, just do that and give us your TradingView login ID. Now the TradingView login ID, on this I'm logged into CFRN, right? Yours might be up here in the upper right-hand corner. For me, it's in the upper left-hand corner. Yours might be up here. It might have a round circle that has the initial of your last name or the first initial of whatever your TradingView login ID is. That's what we need. Hover over that and tell us what it is. That's what we need. Okay. Okay. Spreadsheet. We had a pretty good day today. It wasn't as good as yesterday, but then no other day was as good as yesterday for us. We started out slow again like we did yesterday, but it never kicked in the way it did yesterday. We ended up, well, it's the 20th day of February, as I said, 2025. We're 126 on the NQ, minus 12 on the Russell, plus 32 on the gold, and plus 60 on the ES. That put us at $1,640 a contract on the morning session. Today it took 2 minutes and 1 trade to get to $1,500. So we took a total of 47 trades this morning. So on a month now, we're at $25,305 over 17 business days, averaging $1,488 per contract per 2-hour business day. On the year now, we're at $57,482 over 37 business days, averaging $1,553 per contract per 2-hour business day. So, following the 24/20 blueprint, if you were to quit trading when you get the goal for the day and add 1 contract per month, so far this year, you would have only had to work 6.15 hours, and you would be averaging $1,482 an hour, right? You'd be at $9,120, averaging $1,482 an hour. Okay. Okay. And that is it. So let's get into the trades that we took. We took quite a few trades. We'll start out with the Russell. That's where we had the fewest number of trades. We ended up okay on the Russell. No, we didn't. We ended up negative again on the Russell. Sorry, I thought we ended up okay on it. But we started out here with a nice trade on the Russell. We had a 24 tick trade there on the Russell. Okay, then we had a break even, and then we had a 14 tick trade there to get us to 38. And then I stopped out on that one, put us down to 13. And then at the end of the session, I stopped out on that one, and it put us down to minus 12. We ran out of time. It did end up going down this distance. You know, I was judging this at the time. If we're gonna drop from right there, it would have been this distance because that was that leg length. But if you take that and you put it right there, it was just about the same thing right there. It didn't make the whole leg length, and then it pulled back up. That was it during the break. Looks like there was one nice trade right here during the break, using the divergences in it. There was one nice trade there. There was a trade right here for the long. There was a short right there. A long right there, a long on this one right here that only went about 0 ticks into profit, it says, and a long right here. So there are 2 stop outs you would have had and 2 nice trades in there you could have had. And there's a short right here going on right now. If I can find my DOM, it's not too late to put that on, I don't think. And I'm still looking for my DOM. Here's my DOM, and it is not too late to put that on. So I'll put that trade on right now, right on the Russell. So I'm short the Russell. The spot to get short was right here at 40.5. I'm actually short at 40.1. Not the best spot, but still okay. So we'll manage that trade over here on the side, and we'll get into the next one here. The Russell was the fewest amount of trades we had. Now gold was the next. Now on the Russell trade, it's running into profit a little bit here. When it gets to 10 ticks in profit, I'm going to bump the stop to break even. Okay, here it is. I'll let you know, keep you updated. The golds, we had quite a few trades on the gold. We started out pretty bad on the gold. We were getting whooped on the gold to begin with, but we came around right there. See those two stop outs? All right, on the Russell trade right here, it's just about to hit the spot where I would go to break even. It's got to get down to 0.1, and I'll bump that stop to break even. Okay. Just a couple more ticks. Should get there right now. Come on, one more tick. It's almost there. This is discipline. There it is. Stop to break even. All right, now I'm just going to lock in 5 ticks so I don't have to monitor it so closely. All right, so we got 5 ticks locked in on that Russell trade that we just took. And I'll let you know if it takes us out of +5 or if I move it even further into profit, which I'm about to do. Hang on. Let's see, here it is right here. So I'm going to lock in 10 ticks there now. All right, so I have 10 ticks locked in, and that is it, 10 ticks. So on the Russell, that's $500 right there. That's what that was with 10 contracts on. It's $500. All right, so let's get into the trading we did here on the gold. We started out with gold with a 1 tick gain right there. Then we stopped out on that one, put us at -9. Then we had a break even. Then we stopped out on that one, put us at -19. Hang on. Then we stopped out on that one. I don't think we stopped out on that one. I think I have an extra thing in there. Yeah, I don't think we stopped out. One of these we didn't stop out on. I think this one right here we didn't stop out on. We went from -9 to -19 to -7, then to +7. So somewhere in here there was something that was a win instead of a stop. I don't know if it was that one. Probably not. It was probably that one. Or maybe that one. No, it was right here. It was this one right here. That's what it was. That was not a stop out there. But we went from -9 to -19 to -17. So we had a little bit of a win there, a 2-tick win. And then we went from -17 to -6. So we had an 11-tick win there. We're still negative though. And then over here we had it looks like a 10-tick gain to get us to +4. Then a 6-tick to get us to +10. Then a break even. Then we had a 10 to get us to 20. And a 1 to get us to 21, a break even again, then a 10 to get us to an 11 to get us, 10 to get us to 31, and then one more 1-tick trade over here. Oops, I'm missing one. We had 1-tick trade to get us to 32, and then we had something else right here. I don't know what that was. And that was it. All right, so this is all during the break right here. You can see there were many trades that triggered here during the break. If you're using the optimized trigger, but not using the optimized trigger, you had a divergence trade right there that worked out great. There was one right here that did not work out at all. One right here. That would have been just enough to get you, no, that would have, see if you went short right there, that would have stopped you out. One right here, that did not work out at all either. So you had 3 in a row that did not work out. You had a good one right there, a good one there. This one right here would have been enough to get you to break even. A good one there. Good one there. This one right over here would have been enough to get you to break even. This would have been a good trade. That would have been a good trade. That one would have been a stop out. So you had probably, I would say, 60% of those trades or better were profitable trades, where the rest were not. It was a rough period right there on the gold. We ended up with a +32 on the gold. Okay, now I'm going to do the NQ next because we had a ton of trades on the ES. We had 25, 10, 15, 21 trades on the ES. But we'll do the NQ next. Okay. And there's a long period there where I didn't do any trading at all, it looks like. What was I doing? I didn't do any trades all through here. And then here we finally took a trade on the NQ. We got a +4. Then we got a +16 to put us at 20. And then we got a -60, put us at -40. And then moving along, we didn't do anything, a couple of break evens. Then we got a +32 to get us to -8. Then a +16 to get us to +8. Then a +75 to get us to 83. Then a +11 to get us to 94. And then a +32 to get us to 126. And that is where we ended it for the morning session. during the break. It doesn't look like there's a whole bunch of movement here, but not a lot of trades. It was one trade right here that would have been an okay trade. It would have pulled back pretty deep, but it ended up going down significantly. There was a trade here that would have been a nice trade. That pulled back pretty deep too before it went down, but it was a good trade. There was one right here that went into profit. Now it had to go 10 ticks into profit. So 825, I'm sorry, we're on the 50 range. I had to go 20 ticks into profit. 825 up to the high of that was 1425. So that's 6 points. That's actually 30 ticks, not 24 ticks in profit. So you had some room in there. So that would have been a break even. Then the next one here, that would have, right there is where you would have gone, and that would have stopped you out. Yeah, that would have been a minus 60 on that. Could have gotten right back on this one and this one. Over here, that would have ended up being a stop out. This right here would have, no, it went 45 ticks into profit. That would have been an okay trade. This one right here would have been a nice trade. This one over here would have been a nice trade. This one here went 22 ticks into profit, would have been okay. This one went 18 ticks into profit, so that would have been really close. Depends where you got filled. You might have stopped out on that, probably stopped out on that. Depends where you got filled on it though. And over here and here would have been nice trades. Okay, that's what the NQ did. Now, the ES. We got a bunch of trades on the ES. And, you know, it's a Pine script thing that these labels stop printing. They max out how many labels will print. And it's not a variable that I can set. I wish it were, but it's not. At least from the research I've done, it's not. I can put in the support ticket and see. Speaking of the support ticket, they never did get back to me on that support ticket I put in last night. All right, so our first trade here on the ES, we picked up 12 ticks. That's where we got the goal for the day on the very first trade. Got the goal for the day, and then we stopped out. So we went from plus 12 to just plus 2. And then we went from plus 2 up to plus 18. So that was a really nice trade right there. A couple of break evens. And then we went from 18 to 20. So we had a 2-tick trade. Then we had a 12-tick trade to 32. Then an 8-tick trade to 40. Then a break even. Then a 1-tick trade to 41. Then a stop out down to 31. Then a 2-tick trade to 33. A 1-tick trade to 34. Break even, and a 2-tick trade to 36, then 10-tick trade, no, I'm sorry, a 10-tick trade, a 6-tick trade to 42. Then I changed right here from the 7 range to the 9 range. So my stop out there was 15 ticks. I had a 15-tick stop on that, down to 27. I went to 28 there. From 28, we went to 36. So that was a 8-tick trade right there. And a break even, another break even. They went from 36 up to 54, 54 to 58, another break even, and then 58 up to 60. And that was it. Oh no. Okay, so I didn't count that last one. Whatever that was, I didn't count. So there were 2 positive trades that I didn't count today. And that looks like it was a nice one. I don't remember what I got on that. But anyway, getting into the break, just looking for the divergences. There was one right there for a nice trade. One right here. This bar would have been the buy. That would have just about stopped you out to the tick, depending where you got filled. It was followed up by this one that went against quite a bit, but it ended up being a nice trade after all. And that was followed up by this one. We would have bought the open of that bar and it would have stopped you out. This one here, you would have gotten it right back. And right here, again, that would have been right near stopping you out to the tick. Actually, you know what? It might not have, because it's a 15-tick stop. So both of those ones that were just about to stop out to the tick might not have been stop outs because it's a 15-tick stop. I forgot we're looking at the 9 range. This one right here would have been a break even. This one would have been nice profit. This would have been nice profit. This right here would have been a break even. This would have been a break even. And this would have been a stop out. That would have been nice profit. And going all the way over to here, I guess. This bar right here, if you entered here, at 61. The low of this was down at 58.25. So that would have been okay. You'd been okay on that with a 15 tick stop. That's it. The last one was right in here, and that would have just finished working right there. You probably would have gotten a break even on that right there. So we had a whole bunch of trades on the ES today, and we ended up with a plus 60 overall on the ES. So it was a good day. Good day overall. Notifications. Oops, didn't mean to do that. Okay. All right, so we can get back into the trading here. Now, if you're just getting in on YouTube and you haven't taken a free trial with us and you want to, go here to mytradingiq.com right here. Click on the purple button. There is no credit card required for the trial. Click on that purple button and you'll be sent to this registration page. Just fill it out. That's all you need to do. Fill it out. Make sure you give us a TradingView login ID. Okay, you don't get any charts if you don't give us a TradingView login ID, or you don't get any TradingView charts anyway. TradingView login ID. All right, so trades. Let's see. Nothing is leading into the overbought range. Well, the black is right there, but that's not a trade. Now, I haven't looked to see if there are any questions yet. Hold it. Hold it. Questions. All right, Dan, if it does not get to your break even, will you stop out or will you manage a trade to get out before the stop out? No, Dan, I stop out. And that's a good question. It's probably something I should address. So in here in the trade rules, these are the rules right here. All right, where you start out with your stop and it says when you move it to break even. If you don't get to break even, this is the way I do it. All right. Now you can do it differently if you want to, but the way that I look at it, you have to have a risk management plan that you do every time, the same exact way every time, and so I leave the stop where it is until price gets to break even. If price never gets to break even, if it doesn't go enough to bump it to break even, I never move the stop. The stop always stays where it is, and I stop out on that trade. Something just happened. The markets are going nuts right now. Look at the gold jumping around. The ES is jumping around. The NQ is jumping around. And that's not gold. Those are all the indices right there. Sorry, it wasn't the gold, but it's all the indices. The gold is actually, well, the gold is jumping around a little bit too. Here's the gold. Something just happened. Anyway, the risk management strategy that you use. If you don't have a risk management strategy, you should not trade real money ever. Okay. Because if you don't have a risk management strategy, you don't have a trading plan, and you're not going to last, not long term. You might get lucky for a little while, but you won't get lucky forever. This is what I use, and this has worked for over a decade. And the question, again, to those of you guys who may just be coming on right now, if I don't get to the point where I would move my stop to break even, do I move the stop at all? And no is the answer. Just leave the stop where it is. When you put a trade on, you have to accept the risk for that trade. It'll take pressure off of you. Accept the risk for the trade that you're putting on when you put it on. And if you can't accept that risk when you put the trade on, then don't put the trade on. Okay. And I mean, I know that those are just a bunch of words, but like on a 50 tick range, we have a 60 tick stop. That's $300 with one contract. If that's too much, then don't trade the 50 tick range. And if the market's too wild that a 50 tick range is the smallest that you can do, then go to a different market. There's a bunch of different ways to make it so that you're most comfortable trading, and that's what you need. You need to find your own comfort zone when you're trading. You need to find a market that works for your personality, a market that you can bond with, really. You know what I mean? To have rules when the news comes out. I don't typically pay that much attention to the news unless it's a high impact news event, Dan. So just don't trade when the news comes out. Give it a few minutes. My rule is, let me see if I can show you. I can't really do it so well with this. I can do it here with the gold. You see the totals at the top and the bottom. You see how you have the totals there, and there's usually no spread in between the bid and the ask. If news comes out and the liquidity dries up, meaning all these are like single digits or some of them are blank. And you see how there's a little bit of a spread right here because something did just happen. There's a little bit of a spread. Even if we go to like, this is the NQ right now. You see how small all these numbers are? None of them are double digits. There's something that just happened that's causing this amount of volatility. So wait until it settles down. Wait until you have some more liquidity in the market. Because if you don't have liquidity in the market, as soon as you enter, even if it's a limit order, as soon as you enter, like if I put a limit order on up here and there's a spread between the bid and the ask, I'm going to lose the money in the spread immediately, at least the money in the spread, and then any slippage that happens after that. So that would be my rule. Wait till the liquidity is back in the market. Right? I can't say, wait 3 minutes or 2 minutes or 1 minute. I can't put a time number on it, but you can put a value on it, a liquidity value, because that's what you're really waiting for. Waiting until the markets come back to somewhat back to normal. You'll be able to put trades on and take trades off without slippage, without excessive slippage. You know what I mean? That's the way that, I mean that's the way that I do it, but that's the way that everybody should do it, really. You could give yourself a limit. You could say, like, when the FOMC comes out, I'm not going to trade for half an hour until after the FOMC comes out, and that's okay. But then they start talking about the FOMC a half an hour later. So then you say, okay, well, I'm not going to talk for another half an hour after that, and that's okay. But then it's 3 o'clock in the afternoon, and the trading starts to diminish anyway. But you look at the market. The market's what determines whether you should trade or not. Not some clock on the wall. The market is right here, and that's saying, you know what, we got double digits, we're back to kind of normal volume right here. We can trade the ES again. Okay, that's the way I do it, and I would suggest that everybody do it the way I do it, because, well, that way works long term. All right, so while I was doing all that talking, there was a trade here on the ES that went about 10 ticks into profit, even more. I've got these in 9 ranges. It went probably 15 ticks into profit. This is not a trade because you don't have separation. This is a trade over here on the Russell right now. It's just barely on the oversold, so it's a questionable trade on the Russell. You could wait until it gives a down close on this bar if it's going to give a down close on this bar. And the way that things are right here, think about this. The NQ's got a trade too. Think about this. What should happen right here, right now? Right? This is a leg length down. We should get a down close. It should give another leg length down about the same thing and come down to here. And then retrace about 50% of that leg length, like this up to here, this up to here, this up to here. That's what should happen. Okay. That's the way that I look at things. I'm still in that Russell trade I took a little while ago. I totally forgot about it. Here, I'm going to throw my stop and break even on that. I totally forgot about that trade. I'm going to +2 ticks on it. That was the one from back here. It went all the way up there and came all the way back down. Okay, so now I'm going to bump my stop to +10 ticks, 15 ticks, 20. There we go. All right. So I took 2 Russell trades, right? I took this one for 10 ticks. I took one for 10 ticks, and I just took that one for 20. So altogether, that's $1,500 on the Russell while I've been talking. There was an NQ trade here. Am I in that? I just got the whole thing on the NQ trade. I did take that NQ trade. I got 75 ticks on it. I can't show you that. I wish I could. But that's all done. I still haven't figured out where the time and sales windows are on these things. I know time and sales, I know where that window is, but all right, so right here on the yes is another trade. Okay, now this was from the open of this bar. It didn't go any into profit, so it's still a valid trade if you want to get into it. And the pullback on this, look at what it's done. And what should the markets do? Well, right here, it's actually changing directions right here. So it's kind of iffy what it should do. But when you look at it, the markets were going down, then they retraced, then they went down, but then the retracement got too deep. So then this is the retracement of the leg up at that point, right? So now what it should do is another leg up like this. That's what it should do right here. I don't know what it's going to do, but the retracement was pretty deep. Both of those were pretty deep. Now, if you remember, a couple days ago, I talked about the different kinds of chop. Right now, that's what kind of chop that is. It's the worst kind of chop to trade in. We have higher highs and lower lows. So in this case right here, you just say, I'm gonna not trade the ES for a little while and go trade something that's not like that. Like this chop right here is good. This is good chop. Right here. Channel chop. That's the best kind of chop. This is channel chop over here. That's the best kind of chop. Okay. Dan, did you go to that webinar I did on Wednesday? Or if any of you have read the how to trail stop stuff, I talk about the different kinds of chop in here. Right. You can all have a copy of this. This is actually out here. I put it on this web page too. If you go to trade rules, it's on the bottom of trade rules. Actually, is it? No, I didn't put that there. I put this here on the bottom of trade rules here. I thought I put that there too. Okay, well, you got an email for that. All right, it is 125. 125, and you see we're at the top of the chop on the NQ. So we're at the top of the chop like that. You sell it and expect to get down to the bottom of the chop like that, right? Pretty straightforward and easy to do. So I have a 60 tick stop on this, and I wouldn't expect the full 75 ticks out of this, but I should be able to get some kind of a profit out of it. See, it's right at the top of the chop right now. So we got 16 ticks out of that last move down. Now I was supposed to enter in, it just stopped me out, I think. I was supposed to enter in here at 510. Did it? It did. It took me out. I was supposed to enter right there at 510. I don't know where I actually got in on that. And pork chop. Yeah, pork chop's good too, with applesauce. That's how I like my pork chops. Oh, is that a southern thing? I don't know about that. The gold has a long where it is. The Russell had a long from right here. It's late to get into. All right. All right. No trades. It is 127.5, so I have 2.5 minutes left here. We don't have any other trades setting up right at the moment. Not right at the moment. And Scott. Is Scott in here? Don't believe he is. No, he is not. All right, so right here is a long on the gold. Right there is a long on the gold. Nothing there, nothing there. So all we have is this long on the gold, and that stop is going to break even right now. And that should go up here. Right? It should go up here. Right now, this was the retracement of that leg up. It should go up here, but it just took me out of break even. Interesting stuff. Alright, so we need an up close over here on the ES and up close on the ES. Up there. And it's just about time to wrap it up anyway. So is Cliff in here? Cliff is not in here. All right, right there on the gold is a short trade. It is now gone too far into profit, and I didn't get filled. See, my order is waiting. I'm going to cancel it. All right, that is it, guys. With that, I am going to wrap it up for the morning, the afternoon, for the week. Until a week from Monday, I am going to wrap it up. All right, so if you have not taken a free trial, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Click on that purple button. It will bring you to this registration page. Just fill it out. Once you fill it out, we sent a link to get into the morning session. Okay, make sure you give us your TradingView login ID, right? I'm going to take the word optional off of that. This is optional. This is not. Give us a trading mandatory. I'm going to put that in mandatory. Gives you TradingView login ID. Okay, if you don't have a TradingView login, you really need to get one. All right, and that is it. With that, I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Thanks, guys. I hope to enjoy my vacation. I hope to. Hoping for the best.
All right, recap of the morning
session. Today it took 2 minutes and one trade to get to $1,500.
Good job.
Thank you. Thank you very much.
And on behalf of all of us, Michael, hope you and Jada have a wonderful vacation. Good time.
Thank you.
Lots of relaxation. And personally, thanks for everything.
You are welcome, and I thank you, and I am hoping for the best.
All right, buddy. Take care.
Thanks. All right, we'll see you.
We left off on the NQ, and here's where we opened last night. Here's the opening candle. We're below the BBC. We expect lower prices. Came down to the zone, the lowest weekly zone for the NQ. Found support at blue and climbing. Actually touched the short target once, twice, 3 times. And blue and climbing came in, took us up to the BBC. Pullback held. Holds more often than not. Sent us back to support at the weekly zone, where we consolidated for a few hours. Actually, during that consolidation, we reached down and spiked through that target. That was at the 9:30 opening bell on Wall Street. And then 10 a.m. gave us quite the rally. And then it didn't. Got us back below the BBC. Blue and climbing turned to red and falling. Came back down to the short target, and right now we're just consolidating at the lowest weekly trading zone for the NQ. Crude oil. This was the open. We're above the BBC, but we got red and falling overhead. So we come down to the BBC, the initial pullback holds. We get a wee bounce. And then on the retracement, red and falling takes us below the BBC, all the way down to the short target. We spike it. Resistance at red and falling. See how the step line and red and falling are running parallel to each other? So we come all the way down to the zone below. We actually get below it. In fact, we even spike it all the way down to here. This is an area where you should expect support right in this area here, but we spiked it when buyers came in. Red and falling turned to blue and climbing, got back above the BBC, so we had a leg, a retracement, a leg, a retracement, and now it appears we're headed for the long target. Now on the way to the long target, keep in mind this area we've already cleared. We're right at that area right there, 70.25. We're at 22, but 25's potential resistance. And then right here where blue and climbing turned to red and falling, 70.40, 70.45, and then you're at 70.50, the long target. If we get through the long target, I can take out this high from yesterday at 70.54. We just might see. We got everything down here. Well, the step line's starting to lean right, so let's get out of this area. But if we can get up to 70.70, then we'll probably see 70.90. Gold took a different direction. Here's the open, pulled up to the BBC, the pullback held. So we get a leg, a retracement, the pullback held. That sent us down to the target, through the target, and we found support at the weekly zone. We traded through the short target, and then on the bounce, that short target became resistance. That happens often. Which sent us back to the zone, support, back to the BBC resistance, and we got a low on the day so far of 28.44. This is the lowest weekly zone. So unless something happens between now and the close, we're going to close the week below the lowest weekly zone on gold. It's been a tough week for gold. It really has. But you'll notice on the way down, the pullback held, the pullback held, and it held, and it held, and it held. And it held, and it held, and it held. So, we're printing a green candle, okay? Red and falling got directly below price, so based on 15 years of history, by close of business today, we would expect to be at or above the lowest weekly zone. Has that happened every time, every week, in every market? Nope. However, based on history, that is the high probability thing. So that would take quite a rally in gold, and on a Friday afternoon, what would cause gold to rally that much? I don't know, and it may not. So if we do make it back to test the BBC, see what happens. Hang on 1 second, please. Okay, last but not least, silver. Realized last night, silver, you need to be on the K contract. We've been on the H all week. This was the open. We pulled up to the BBC. Leg, retracement, leg, retracement. Now we seem to kind of be stalled out right here. Okay. So one last look at the daily. There's that doji. Now, way down here, all the way up here. And since the market opened last night at 6 p.m. Eastern, after traveling way up here and way down here, we're right back, basically at yesterday's low. So how we close today will be important. Okay. Again, the step line is starting to lean to the right a little bit. That's the potential for a retracement. Just keep that in mind Sunday night when the market's open. Major support below us after the low of today is the low of January 14th, and then the 38% fib retracement, which we last visited on January 14th. And look at the bounce it gave us. Does that mean it'll give us that much of a bounce or any bounce this time? No, but historically, when you hit a fib retracement on a daily chart of any market, any stock, any whatever, it's usually good for a bounce. And the way things are looking, guys, by this time next week, we could be down in this area. Is that the end of the world? The sky falling? No, none of the above. It's just how markets work. To become a member, send an email to support@cfrn.net. In the subject line, put "I want to become a member." In the body of the email, put your name, put your phone number. We will not call you, but we will send you an email that explains everything it means to be a passport holder and provide you a link that you can click to become a passport holder. You'll get 2 hours of live training every trading day in an interactive environment. Live trades and live markets, while you ask every question that pops into your head as you trade along in demo to qualify to go live. 9 out of 10 new traders don't have that, and that's why they fail. So we've plugged that hole for you. 2 hours live training every trading day. You also get private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder are fluid across all markets, all time frames. As a passport holder, you'll get the Logic 247 alerts round the clock. You'll get the concierge trade alerts the second they're published each evening. Monday mornings, you'll get the weekly trading zones at 6:15 a.m. Eastern. And you'll be able to attend the members only workshop every Thursday night, 8 p.m. Eastern. Everything a trader needs, all under one roof, one low price. Just send this email to support@cfrn.net. Plus, you get the golden key that opens all of the private channels on Telegram. There's public channels, private channels. Trial people have access to the public channels, but once you become a passport holder, then you have access to everything. All right, let's wrap it up with our good word for the day. The right attitude. Proverbs 23:7. For as he thinks in his heart, so is he. What separates the best from the rest? Have you ever given that some thought? What separates a gold medalist from a silver medalist in the Olympics? What separates a successful entrepreneur from someone who doesn't make it? What makes it possible for one person to learn and flourish after making a mistake while someone else just gives up? Attitude. The Bible says, again, Proverbs 23:7, for as he thinks in his heart, so he is. Your attitude can be your greatest asset or your greatest liability. It makes you or breaks you. It lifts you up or drags you down. The right attitude may not let you do everything, but it will help you to do anything better than you would when your attitude is wrong. The happiest people in life don't undoubtedly have the best of everything. They simply try to make the best of everything. They're like a person in a remote village who daily goes to the well for water and says, "Every time I come to this well, I come away with my bucket full." Instead of saying, "I can't believe I have to keep coming back to this well every day to fill up my bucket." Your attitude has a profound influence on your approach to life. Ask a doctor if a patient's attitude can affect recovery time when he or she is healing after an illness. Ask a teacher if a student's attitude has an impact before they take a test. Jesus said in Matthew 9:29, "According to your faith, be it unto you." Like a magnet, faith draws on the strength that God offers. And that's our good word for the day and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.